Right. Hi, everyone. Welcome to today's webinar brought to you by IC Markets Global, where today's topic is going to be on top stocks for 2024. All right, just before we start, want to make sure you guys can see my screen as well. You can hear me loud and clear as well. All right, so my screen should be showing you the first slide of today's presentation, IC Markets Global webinar, top stocks for 2024. All right, great. Thanks, Zoran. All right, hi, everyone. Great to see you, Zoran, Rajesh as well. All right, okay, without any further ado, let's kick things off. All right, okay, as usual, please take note of the disclaimer. This is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading Forex and CFDs. They carry a high level of risk to your capital and should only trade with money you can afford to lose. All right. My name is Ketan Ramachandra. I'm an investment analyst here at Everest Fortune Group. So this webinar series is brought to you in a special partnership with between IC Markets Global and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, so here's the agenda for today. What are the top stocks to watch out for in 2024? But before we get to that, we'll also do a quick recap of which were the top performers for 2023. So we'll look at some of the ETFs that have outperformed last year, as well as some of the individual stock names as well. Following that, we'll look at what were the top AI stocks of 2023, and also what can we expect for 2024. And then, of course, we'll look at the key technical setups. All right, of course, there's a lot to go through here, right? When we look through the indices and the individual stocks, so of course, we may not be able to cover every single technical setup for all the individual stocks. So if you have any preference for any individual stock or index that you would like me to cover, please let me know once we get to section 3. All right. Great. Oh yes, all right. Hi Sagun, all right, and Happy New Year to everyone as well, right? Happy New Year and welcome back to the first trading day of 2024. All right, so what are the top stocks to watch for in 2024? Without that, before we get to that, of course, we would need to have a quick recap of what were the best performers in 2023, right? So we'll start off with the ETFs and we'll look at some of what has been outperforming last year, right, in 2023. Right, okay, so we've got the Van Eck Semiconductor ETF. Now this, of course, this will consist of all the top semiconductor companies such as NVIDIA, of course, Micron, Intel, AMD, Taiwan Semiconductor, and so on and so forth. So you can see that this sector has probably been one of the best performing sectors, ETF sectors, in 2023. Okay, just a caveat here before we move on. I can't do a complete exhaustive search across all the ETFs and individual stocks. So to the best of my knowledge, these are the best performing ETFs in the US for 2023. There may be other ETFs that could have outperformed the ones that I've listed here. But as I said, I've not done a completely exhaustive search. It's simply not possible. But I've just looked at most of the ETFs, and this is what I've come across, and which I think to be are the best top 3 best performing ETFs in the US for 2023. Right? Okay. So with that said, these are the 1-year returns. So the Van Eck Semiconductor with the ticker symbol SMH has gained 73% in 2023, followed by Triple Q, which tracks the Nasdaq 100 or the Nasdaq 100 Composite. Right, that has gained 54%. Of course, this has been led by the Magnificent Seven, right, of the big tech stocks. The Magnificent Seven will come to that, and followed by the SPY, which is the S&P 500. This ETF has gained 24%. Right, so you can see naturally where which sectors have typically outperformed the S&P 500. As we know, the S&P 500 consists of various sectors. You have the financials, the cyclicals, the utilities, the energy sector, tech sector as well, right? But you can see very clearly the semiconductor sector as well as the tech sector has simply outperformed the overall market, right? The S&P 500 is a good gauge, good index to use as a benchmark when we're looking at outperformance or underperformance between various ETFs and sectors as well. All right. Okay. As I mentioned earlier, we have the Magnificent Seven from the tech sector, right? Who are the Magnificent Seven? Well, they are Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla, right? So these seven individual stocks have carried uh, the QQQs, right, which is the Nasdaq 100, which is the ETF for the Nasdaq 100 index. Right, as you can see, these are the seven largest companies in this index based on market cap and by weightage. So if you look at the individual weightage, when you combine the when you combine the weightage of these seven companies, it amounts up to almost 40% of the entire index. So you can see how big of an impact they can have on the QQQ. So if you see majority of these companies rising strongly, right, having a good performance, then of course it's going to drive the return on the triple Qs as well. Conversely, if we see the majority of these seven companies having a bad year, right, they're pulling back sharply, entering bad markets, then of course it's going to pull down the triple Qs as well. So, right, it's something to take note of if you're trading ETFs, right? Although, of course, the triple Q ETF is made up of the 100 biggest tech companies, but because of the weightage, these seven big guys have a big part on the direction of the index itself or the ETF itself. So do take note of that. So hence they've been labeled the Magnificent Seven by media last year. So as you can see, uh, this is just in alphabetical order. So these are the 1 year returns. Alphabet 59%, Amazon 81, Apple 48, Meta 194, Microsoft 57, Nvidia 239, and Tesla 102%. So of course, you can see the headlines were all dominated by Nvidia last year with the uh, pickup of AI, right? At the end of 2022 and 2020 and early 2023, when there was a lot of adoption of AI across various sectors, right? Especially with Chat GPT blowing up. So we could see companies such as Nvidia clearly benefiting from this new drive or new demand for AI related components and chipsets. All right. So as you can see, when you look at the index ETFs, right, you can see the Van Eck performing 73%, Triple Q is 54, and SPY 24. But when we look at the individual names, you can see, I would say nearly all of them have at least outperformed SPY and Triple Qs. They may not have outperformed Van Eck, except for Nvidia and Meta and Amazon, but you can clearly see the individual names are, of course, going to have a much higher 1 year return. Right, so these are the biggest or the top 1 year top performers of 2023. Once again, just do take note of the caveat. There may be other individual names in the US that may have outperformed this, but this is for the ETFs and for the Magnificent Seven. All right, now let's look at some of the individual names of that have performed very well in 2023. Right, so we have up first Carvana, Ibugen, Moonlake, BridgeBio, Affirm, Coinbase, Riot Platform, Symbiotics, AppLovin, and Nvidia. So you can see the returns of these companies have been much greater than the Triple Q's Magnificent Seven, as well as, of course, the ETF. So you can see, although the headlines were dominated by AI and AI related companies, actually, if you uh, pay more attention and do a little bit more research, right, dig under the hood by using stock screeners to see which are the best performing companies year to date, you will actually see there were a lot other names that were performing much better than the AI related stocks, right? In this, out of these lists, this 10 list, I have 10 companies here. Only I would say two are AI related. That's Nvidia and Symbiotic. Carvana is an online car sales platform. Imugen, Moonleg, and BridgeBio are biotech companies. Affirm Holdings is a buy now, pay later company. Coinbase and Riot, as we all know, Coinbase is a crypto exchange platform. Riot Platforms is a crypto mining company. Symbiotic is an AI related company. AppLovin is an app developer company. Right, so as you can see, these individual names actually have outperformed outperform Nvidia and the broader market significantly, right? So sometimes it's easy to get carried away by the headlines, right? We all see this in media headlines to see AI related companies, Nvidia, Tesla, and so on and so forth. But if you actually do a stock screen, right, and every month, every quarter, look at the top performing year to date companies, actually you will find there are a lot more other companies that have outperformed such big uh, such headline grabbing stocks, right? Do not be swayed by the headline grabbing stock. Of course, they will definitely uh, yield a good return based on fundamentals, earnings, and revenue. But of course, if you do a stock screen as well, you are able to find somewhat I would call so-called hidden gems, and you can clearly see here biotech companies have outperformed very well. Even the crypto-related companies have done well, and of course a used car sales platform, which is very, I guess, in a sense old school compared to all the biotech and AI related companies. So do take note, do not be swayed by the media headlines with all Nvidia and AI related companies, right? There's a lot of other opportunities swimming in the background, just waiting for us to be fished out. All right. Okay. So just take a note of that. All right. So what are going to be the top stocks for 2024? Is it going to be the Magnificent Seven once again? Is it going to be biotech companies, crypto related companies, right? So what's important is look through as we come as Q4 has ended, of course, and we are in the first quarter of 2024 now. Q4 earnings for 2023 will be starting towards the end of this month or early Feb. So those earnings are definitely going to play a big part in the direction of equity markets. If the earnings results come in better than the respective forecast, right, in terms of EPS, earnings per share, and top line revenue, then of course it's going to provide a very bullish catalyst for that individual stock and the exchange and the index itself. So how do we look for that? Well, I'm just going to give you an example of one, but I can't, unfortunately, we don't have time to go through every single company, but let's just take Nvidia as an example, right? So we have to look through the Q3 earnings report and look out for the Q4 guidance, right? Q4 guidance or forward guidance will tell us what the company is expecting in terms of earnings and sales, right? That will tell us whether they're projecting higher revenue, higher sales, and that can also give us a pretty decent insight into what they expect for Q4 earnings, right? So with that, let's jump over to TradingView uh, as well as Google, right? We'll start off with TradingView. So let's go on to NVIDIA, NVDA, right? So the good thing about TradingView is, as you can see here, towards the bottom of the chart, we have the different icons here. E is for earnings report, D is dividends. So if you look at the one in green, right, this tells us that there was an earnings surprise for EPS and revenue as well. All right, so you can see this is the reported figure, $4.02 per share. The estimate was $3.36 per share. There was an earnings EPS surprise of 19.4%. Similarly, for the revenue was estimated to come in at about 16.2 billion. We had revenue reported at 18.12, so we had almost 12% surprise in the revenue component as well, right? So when you see both EPS and revenue coming in higher than the respective estimates, of course, it's going to create a potential tailwind, right? But in this case here, you can see the stock actually pulled back, right? Actually pulled back. It found support around here at the start of December before going higher. Even here, you can see for Nvidia, earnings was stronger than the respective estimates, but actually you could see investors somewhat, you could argue that they've sold off into a good earnings report, right? This was earnings for Q3, this was earnings for Q2. This so the last two earnings report, you've actually seen investors selling into a good earnings report. However, if you look at the earnings report of Q1, this was a blowout, right? You had earnings, EPS, and revenue come in higher than the respective forecast, and we saw the price gap up quite massively, right? So do take note that of how earnings could actually drive in, the direction of the stock market, and of course, I think an earnings miss is likely going to cause the stock price to pull back. So we've got the next earnings report coming up for Nvidia on 21st of February. So do take note of that earnings report. As of now, you can see Nvidia is trading very close to its first resistance, right? We see price making a swing high resistance here on 1st September of last year, another swing high resistance here on 21st of November, and towards the end of last year as well, finding resistance again. So should we be buying Nvidia at this price levels? Probably not. I would be looking for a pullback, right? I would be looking for a pullback, and that pullback could potentially be around $455. Why is that? We see a pretty decent swing low bounce here that occurred in 5th of December, and this is a level that also aligns quite well with the 50% Fibonacci retracement. Right? You can see this retracement level here, right? Okay, so this is how we can look. TradingView lets us have a quick snapshot of what were the past earnings, whether they beat estimates or not, and also we can tell what is the forward guidance as well. As you can see here, the reported EPS was $4.02, reported revenue was 18 billion, right? And for Q4 earnings, they are reporting estimate of $4.48 for EPS and 20 billion for revenue. So clearly you can see the forward guidance is positive, right? Forward guidance means what are they expecting for Q4 earnings? It is positive. 4.48 is greater than 4.02, and of course 20 billion is greater than 18 billion. So when you see these estimates being projected higher than what was reported in the previous quarter, it means they have a positive forward guidance, right? So they're expecting revenue to increase and their earnings to increase as well. That's it. Looking at technical levels, I don't think we should be buying Nvidia here. The market could pull back in the first week of the new year, right? Of the new trading week, markets could pull back. Whether it pulls back as far as 455 in the case of Nvidia, we're not too sure. But this would be the first major support. But I think markets are likely to pull back a little bit as well. As you can also see, I've put a stochastic oscillator at the bottom as well. So for this oscillator, I'm using the parameters of 20, 3, and 3, 20 for the length and 3 for each of the smoothing parameters. So you can see pretty much every time stochastic has gone above 90, we have seen prices stalling as well, right? So let me just make this a bit more clearer here, right? You can see here as well. Hang on. Here, which is, sorry, 12th of October, 17th November, and here as well. I won't go through all of them, but you can clearly see over the last 3 times when stochastic has gone at least 85 and above, we have seen the share price for Nvidia come to a halt and reverse and pull back. Although stochastics is currently about 80, 85, we could see price push a little higher, but we may see, I think it's more likely to run into resistance around $500, and it is likely to pull back. So going into Q4 earnings seasons, I would say probably wait for prices to pull back for Nvidia before initiating a new position. And of course, with the earnings forward guidance for Q4 being positive, that's great. But of course, what ultimately is going to matter is whether the actual results come in higher than the respective forecast, right? Another way to get a more in-depth view of the Q3 earnings result is in the case of Nvidia, enter the ticker symbol, right? So this can be NVDA for Nvidia. For Meta platforms, it'll be Meta, META. For Microsoft, it'll be MSFT. Tesla, it'll be TSLA. And after that, you type investor relations, right? Look for this. Oops. So when you come to Nvidia Investor Relations, it takes you to the official Nvidia website. And over here, you'll be able to find out, look through the latest results as well. So you can go through okay, wait, let's go to all results, right? Quarterly results, all results. Not every page for each company is going to be exactly the same, but it will be pretty similar. So what we are looking for is the 2024 Q3 results, okay? So this is FY 2024, right? Fiscal year 2024, right? So the Q3 results for NVIDIA were released last November, where you saw record revenue up 34% from the second quarter and up 206% from the year before. You can see the data center revenue was up again 41% from the previous quarter, 279% from a year ago. So what we're trying to look for is this is just a press release. You can also, of course, look at the main presentation as well. So you can see the main comments by their founder and CEO as well, and which sectors are actually driving their business. So for this, you can see the forward guidance has been yeah. So here, outlook, usually it'll be outlook or forward guidance. So you can see here revenue expected to grow to 20 billion, whereas we had Q3 FY24 being 18 billion, right? So Q4 FY24 is expected to be 20 billion. So that's up. They've projected it upwards. GAAP and non-GAAP gross margins are also expected to increase, right? And so on and so forth. So you can get a better insight into uh, the outlook or forward guidance for Q4 when you visit the respective press room or newsroom for each stock. So this is the press release. We can also look at the presentation, right? So this is the latest presentation. So you can dive into this and look at all the key earnings summary, the key announcements, overview, and financials as well, right? So you can do this similarly for most of the other companies as well. Should you wish to get more insights or do more fundamental research into the earnings report of Q3 and also to get a good idea of what is the forward guidance or the outlook for Q4 earnings. All right. Okay. So let's head on back to the slides. So yes, also do look out for, because we've also seen equity markets being supported by the so-called Fed pivot. We've seen a very dovish outlook by the Federal Reserve from December's FOMC meeting, when the statement press conference projected a very dovish outlook for 2024. So that has caused the US dollar to sell off. It's also sent US Treasury bond yields falling. So when you see the combination of the US dollar and Treasury yields falling, this provides a very supportive environment for equity markets, and which is what has been a significant tailwind or catalyst for the Santa Claus rally that we saw over the last few weeks, right? So if do take note, if as we progress throughout Q1 through Q1 of 2024, if for whatever reason Chairman Jerome Powell comes out uber hawkish once again, and if we see the value of the US dollar rise strongly together with US Treasury bond yields rising strongly, this could then create headwinds for equity markets once again. So do take note, a simple way to see if equity markets are being supported by the broader macro environment would be to look at the value of the US dollar and to look at the direction or the trend of US Treasury bond yields, right? Okay, so what are the top AI stocks? This is the next part. Right. Okay, so this list here is by Forbes. Once again, caveat, there may be other AI stocks that may have outperformed the ones that I've listed here. Of course, I can't, it's simply not possible for me to do a completely exhaustive search, but based on what I've found, these are the best performing AI stocks of 2023 based on a one-year return. So we have NVIDIA at 239%, C3 AI at 170, Palo Alto Networks at 111, and UiPath at 95%. Similarly for this, from a fundamental analysis point of view, look through the Q3 earnings report to see how they performed. And then, of course, look for the outlook and forward guidance for Q4. And then we'll tell you exactly, will give us better insight into whether they are projecting higher revenue, higher earnings, because ultimately that is what is going to drive the share price higher. And also look at the macro environment itself. Look at the value of the US dollar. Look at where US Treasury bond yields are not trading, but look at where the US Treasury bonds are yielding. Because if you have very high bond yields and a very strong dollar, this typically acts as pretty strong headwinds for equity markets. All right, so these are the top AI stocks for 2023, and it's very likely Nvidia will be the one that's going to be leading the charge in 2024 again. All right, okay. Okay, next we are going to look at the key technical setups. Okay, we'll just run through some of the ETFs first, and after that, I'll just keep it as an open floor, right? If you have any individual stock that you would like me to cover, we'll go through the technical analysis together. All right. All right. So for Van Eck Semiconductor, I'm on the daily time frame. So you can see this was 2023. It started at about $100 roughly at the start of 2023, and it's ended at about 175. So you can see, right, the 70% increase in 1 year return for this ETF. Right. So the first major resistance here, and uh, just before I go there, this ETF has also made new all-time highs. It has surpassed the previous all-time high back in early 2022, and also surpassed the new all-time high that was made in or the recent all-time high that was made in July, middle of last year, before making new all-time highs at the end of last year. So in terms of resistance, the first major resistance and second resistance are found by a combination of Fibonacci extension levels as well as a Fibonacci projection level. So this projection level started from here, this swing low here in October, going up to the swing high in September and ending with this swing low in November. So we are using the combination or confluence of Fibonacci levels to identify the first resistance, 61.8% Fibonacci projection and 127.2% Fibonacci extension. Right, so the first resistance is at around $180 per share, and the second resistance we're using the 161% Fibonacci extension to identify the second resistance at $206. Right, first support is this pullback support here at 156.56. We can see price making a pretty decent swing low bounce of this level, which is also this pullback level also aligns very well with the 50% Fibonacci retracement. And of course, the second support is at $136.28. Again, this is another significant swing low bounce of this level, as well as the gap up over here, right? So once again, we can see price is trading very close to significant resistance levels. I would say once again, look for the pullback, right? We can expect equity markets to probably pull back at the start of this week, and perhaps even more. So do look for a pullback buying opportunity, right? It's better to look for pullback buying opportunity with regards to where price is currently trading. Right, then if you can look at SPY as well, S&P 500 ETF, similarly, this was the all-time high that was made right at the start of 2022. Price is testing this level once again, came very close towards the end of last year, but it started to pull back. Uh, so the first resistance is at $480, right? It also aligns very well with the Fibonacci projection here at 61.8%. Because this is the all-time high, we are using the 78.6% Fibonacci projection to help us identify the second resistance at $496. Similarly, to the downside, we see a pretty decent overlap support here at $453, right? We see price making a significant swing high resistance here in September and then finding support here. And this level also aligns quite well with the 38.2% Fibonacci retracement. Similarly to the second support, it is also another overlap level here. You can see price finding support back in September and then finding resistance in November. So, and this level also aligns very well with the 61.8% Fibonacci retracement. Right, and then for triple Qs have made a new all-time high at the end of last year. The previous all-time high was at the end of 2021, coming up at $408. Price has surpassed this. So in terms of resistance, we can say that the first to help us identify potential resistance levels, now we're using the projection levels at 61 and 78.6% to help us identify the major resistance levels. We can also take this the new all-time high as a current resistance level as well. With regards to support, the first major support for triple Qs would be this overlap support level here at $385.74. This is a level that aligns quite well with the 38.2% Fibonacci retracement. And the second support at 342 is this pretty significant swing low bounce here. Right. Okay, let's just move on into trading view, where you can get a better analysis on the charts. All right, okay. Okay, if you guys have any, do you guys have any requests for any analysis that you would like to see on the Magnificent Seven or any other particular stock? Otherwise, let's just start with Nvidia, right? Since we're on it, we'll start with Nvidia, and then we can just randomly go across the other uh, tech stocks as well, and we'll cover the SPY and triple Qs as well. So you can see here, um, I like to use the stochastic indicator, especially on a daily time frame, because it sort of helps us identify major selling points and buying opportunities as well, right? So you can see here every time the oscillator has dropped under 20 or 25, right? Um, it has identified potential buying opportunity as well. So let me add a level here. Where's is it 20? Yeah, pretty much. Right, so pretty much every time the stochastic has dipped under 20 or come close to 20 and reversed and come up, it has identified a short-term bottom uh, for the stock. All right, okay. All right, Zoran, yeah, we'll definitely cover Tesla and space. Hi, Richard. Sorry, we won't be covering gold today because it's looking at top stocks for 2024. Perhaps on the next live analysis, we can cover that. But for today, we're just going to focus on US stocks and ETFs. All right, okay. So after I do NVIDIA, we'll go on to space, SpaceX, I believe, right? And we'll cover Tesla as well. Right, so back to NVIDIA. Uh, we can see at least uh, since the second half of 2023, whenever the index stochastic has dipped under 20, it has signaled a short-term bounce, uh, a short-term rebound or short-term bottom for the price as well. Similarly here back in Jan as well, when stochastic dipped under 20 and when it finally sort of bottomed and started to head up, you could see the stock price, share price move up as well. So when we see the stochastic dipping under 20 on the daily time frame, it has typically helped us to identify a short-term bottom for the share price, and it has identified a good buying opportunity. XLE and X. Oh yeah, okay, sure. We'll cover the energy ETF as well as XLV. I believe XLV should be, what is it? Is it utilities maybe? All right, sure, Richard. We'll cover that as well. All right, great. So this is what we have for Nvidia. So similarly, uh, do look for the pullback. I'm not sure how deep the pullback could occur. It may price could run a little bit higher as well, right? Similarly, um, where's my ray horizontal ray? Similarly, when stochastic has gone above 85, typically that's when we've seen the share price run into resistance and typically reverse to drop lower as well, right? So let's see, right now we're still trading under 85. Maybe Nvidia still has some legs to run to go to edge a little bit higher, but potentially based on stochastics and the major resistance here, we do see there is more bias for Nvidia to the downside. Oh, healthcare. All right, thanks, Richard. All right, okay. XLV is healthcare. Great. I think utilities must be, yeah, oh, yeah, okay. Utilities should be XLU, I believe. All right, okay. So these are the key resistance levels for NVIDIA, right? And once again, do take note, we've got the earnings result, Q4 earnings result coming up on 21st September. The forward guidance or outlook has been positive, right? EPS estimate has been increased from Q3. Revenue estimate as well has been increased from the previous quarter. So should we approach this earnings date, we could potentially see a run up in share price as well. And of course, if the earnings come in higher than expected, perhaps it could act as another bullish catalyst. But do take note, the last two quarters, right? Even though earnings and EPS, earnings and revenue beat their respective forecasts, we actually saw the share price sell off into a strong earnings report, right? So the last two quarters, we've seen the share price sell off into a strong earnings report. So do take note of key resistance levels and also use the stochastic oscillator to help you identify potential resistance areas as well as potential buying opportunities as well. All right, okay. So, right, let's go on to Tesla. Right, so let's just zoom out a little bit on Tesla. You can see Tesla has been pretty much in a downtrend, right? Despite uh, having a pretty good 1 year return, of course, coming off this lows at 100, about 200, of course, is going to have a good 1 year return. But if you look at, if you zoom out and look at it uh, on a higher time frame, you can clearly see that price is trading, has failed to break above this descending trend line. You can see price has tested this trend line multiple times, and of course with the most recent one being at the end of last year as well, and price has hit this level and reversed to drop quite sharply, right? So do take note. Oh, and what is this? Am I on the right? Yes, okay. So do take note. uh Price is likely to pull back further for Tesla, where the intermediate support is 246.70. This is overlap support level, right? You can see price running the resistance here, breaching above this level, and then finding support here on 20th December. So it's not a very uh, extremely significant overlap, but it is a pretty decent overlap. So that is why I've labeled it as an intermediate support. And the first major support I've identified it at $232, which is a pretty significant pullback support level. And this level also aligns quite close to the 50% Fibonacci retracement. Similarly, the second support is a decent pullback level at 210, which is aligns well with the 78.6% retracement, right? So similarly here, when we look at the stochastics as well, this is about probably 85 as well. So you can see here pretty much when stochastic has hit 85 and beyond, it has signaled a potential reversal for Tesla as well, right? Most of the time, not always, but you can see how um, there's the thing, we can't use the stochastic as an individual indicator by itself. There's other things you can consider, but of course, it does give us a pretty decent idea as to uh, where the resistance is, especially when price comes very close to this descending trend line, right? Whenever we see price come close to this descending trend line and with stochastic being elevated, it has signaled a potential bearish reversal, right? So these are the key levels for Tesla. So do take note of that. Okay, let's look at the recent earnings. You can see uh, Tesla sold off hard after a poor earnings on 18 October, right? It missed both EPS and revenue, acting this Q3 earnings result acted as a bearish catalyst. We saw a huge gap down, and price finally bottomed here at the start of November, right? So you can see how the earnings report can have a drastic impact on the value of the share price. Similarly here, although earnings, EPS, and revenue surprised on the upside, I think for this, the forward guidance may have been pretty poor. That is why it sold off. So if you look at the estimate here was 72 cents per share. This was reported 91 cents. So they had already projected a poorer or weaker outlook in terms of EPS. Reported was 24.9. Here they were, yeah, see they were estimating 24.2, so slightly lower. So you can see that at this earnings report, although the revenue and EPS beat the respective estimates, but the forward guidance was poor, hence it sold off, and there was another pretty big gap down here for Tesla as well, right? So do take note of how the earnings report and forward guidance plays a big part in how the share price moves. Okay, so this is Tesla, so do take note of this. And similarly, when for Tesla, basically when it has dipped under, when stochastic oscillators dip under 10, it has signaled a pretty decent buying opportunity as well, right? Once again, do not just look at the stochastic oscillator in isolation. Combine it with with other indicators that you're familiar with, right, to help you identify or to help you identify higher probability setups, right? So you can see here pretty much every time it has got dipped under 10 and bottom and come up, it has signaled a potential bullish reversal or potential buying opportunity for Tesla as well. All right, okay. Let's move on to space. SpaceX. Oh no, space is Virgin Galactic. Sorry, I was got confused. SpaceX is, yeah, Elon Musk space company. This is Virgin, of course, Richard Branson. All right, okay. Similarly, when we look at Virgin, it's been in a downtrend after the highs of 2021, right? Well, okay, I think this looks better on the weekly chart. You can clearly see that this stock has failed to reach the stratospheric highs of early 2021 and mid 2021, right? Where it's trading way beyond above $50 per share, and now it's trading at about under $3, right? So you can see that this stock has is way off its highs. It's lost a significant amount of value. Shareholders have lost a lot if you had been holding on to this company. All right, okay. So if you look at earnings, similarly, we had a pretty decent earnings report where EPS and revenue beat their respective estimates, and we saw the share price move higher. Let's see what is the outlook. Okay, they're estimating a loss now, whereas compared to, okay, they were still reporting a loss, but the loss was smaller than actual. The actual loss was smaller than estimate. So they had initially a loss of 41 cents per share, but they came in at 30 cents. So this was an improvement. Revenue was pretty decent. It's a reported revenue 1.72 billion. What is the reported revenue? Okay, so revenue is projected to increase, and earnings per share is expected to remain about the same. They're still expecting a loss as well. But when you look at it in terms of resistance, we do see stochastics trading relatively high. Right, let's just put it at 85 roughly. And similarly, we look at stochastic at about 10, right? It has helped us to identify potential reversals and buying opportunities as well. All right, let's do quick. We can do a Fibonacci retracement from this swing high here to this swing low. Let's see where this resistance stops out. Is it around the 23%? Okay, so it just got past the 23% here. So of course, first resistance for SpaceX will be here. Oh, sorry, Virgin Galaxy is going to be here, which is at $2.72. Second resistance would probably be around this pullback level here. This was a pullback support level in the past, which now could potentially function as a pullback resistance, which also aligns very well or quite well with the 38.2% Fibonacci retracements. All right, so this is how we have identified the first and second resistance for this company. And let's do a Fibonacci retracement from here to here to identify potential support levels. We do see, okay, this level here is it's a pretty strong overlap that aligns with the 61.8%. This is where I will identify the first major support and probably something a little bit closer, perhaps around here, right? This I would probably identify this as an intermediate support. Okay, let's clean up the fibs. We'll use 23 and 61 and zoom in a bit here, right? And of course, second support would simply be this swing low here that occurred at the end of October. All right, so do take note, these are the key support levels for space, which is what I keep for Virgin Galactic. Yep. So if this level gets taken out at 236, then it's quite likely we're going to see it fall all the way towards the first support at $1.90, which aligns very well with the 61.8% Fibonacci retracement, right? Do take note, as of now, then no buying opportunities, or at least the technicals don't seem to indicate a buying opportunity, right? We see a lot of prices trading close to resistance levels. We also see indicators, the stochastic oscillator indicating potential overbought positions as well. So do take note, a lot of the individual names and the ETFs are trading close to their respective resistances. All right, okay, so this is what we have for Virgin Galactic. Now let's move on to XLE, which is the energy sector, and then we'll look at XLV, which is healthcare. All right, so after, so 2020, right, so 2022 was a pretty good year for energy sector, right? With higher crude prices, natural gas, and so on and so forth, right? Energy sector, energy companies such as BP, Chevron, ExxonMobil all had great gains, right? And let's see now. Okay, so for now, technical wise, we see gold, oil prices pulling back, natural gas prices have pulled back as well. So naturally, if the prices of these commodities are heading lower, then of course the total revenue, it negatively impacts the total revenue for the individual companies in this ETF, right? Okay, so first of all, so since this is an ETF, there's not going to be any earnings, results and date. So let's just go purely with technicals. So similarly here, right, you can see where we use the stochastic once again, the stochastic oscillator to help us identify potential reversals, right? Very clearly here on 19 October. Last year as well, 27 December could be the start of further pullback, right? So the first major support for XLE would be this pullback support level here at $80.92, right? You see a very decent bounce off this level here back in 18th of July, and of course in mid-December as well. All right, similarly, all right, let's do the downside, the second support. This level here as well. Right, I'll just stretch it as far back as here. Right, this is also a strong support level here. Right, you can argue this is like a multi-swing low support. So that's why I've identified it as the second support zone, right? Rather than a individual, rather than a level itself, we'll identify it as a zone. All right, regards to resistance, clearly you can see price topping out here and here as well. Right, so this is a pretty decent pullback resistance level at 85.67. So I'll identify this as my first resistance, and second resistance, I'll set it over here, which is another pullback resistance here at 87.64. Okay, let's try and identify any potential Fibonacci levels. Let's see. Is there a 78.6? No. Okay, there's no fib levels here that align with any of the support that we have identified. So that's fine. Let's just remove it. Yeah, it's important not to force a Fibonacci level onto a support or resistance area. If it falls naturally in place, then that's great. But otherwise, try not to force a fib level onto any price point or price zone. All right. So here we can see. All right. Okay. 23 and 38 and 61. Right. You can see here price has run into resistance at 85.67, which is also where the 38.2% Fibonacci retracement level lies. And we can also see the second resistance, pullback resistance at 87.64, aligned quite close to the 61.8% Fib as well. All right. Is there anything else that we can probably do? Let me see. Any other? No. We could probably even argue that, okay, we can, based on the Fibonacci projection, we can even argue that the second support could be at where the 61% Fibonacci projection level lies. We have a pretty decent pullback support level here, but I guess this is something to take note of once, should price break below this first support at 80.92. All right, so right now it does seem the bias for XLE is towards the downside, right? We have a few indicators telling us that, oh, well, we have the stochastic indicator and this resistance zone here telling us that price has reacted off this resistance and is likely to drop lower, at least towards the first support. All right, okay, next up is XLV healthcare. Right. Okay. So I do see strong resistance at about 136. Whether price is going to break above this resistance, we could have a potential bullish breakout, right? It does seem we could have a potential bullish breakout here, but do take note, stochastic does seem to indicate price is going to run out of steam pretty soon. And of course, the second resistance will simply be here at 141. So second resistance is this swing high here that occurred in mid-December of 2022 at about 141.28, which is not the all-time high, right, but pretty close to the all-time high. And the first resistance is at 136.86, which is this pullback resistance level here. Very clear resistance level here, right? So if you do get a potential bullish breakout, maybe it's on the cards, but do take note, stochastic doesn't seem to be indicating that. But yeah, so let's see, every time it's gone above 90, we have seen the share price for XLV run into resistance, particularly here in mid-April, June, July as well. But also do take note, as you can clearly see here, towards the end of 2022, price, at least the oscillator was pushing higher, or was well above 90 for most parts, and price kept pushing higher as well. So do take note of that. We could have a case where maybe XLV healthcare sector could potentially have a breakout opportunity here. All right, what about support? Let's run a Fibonacci retracement from this swing low. Where is the high? Is this the high? 136.51. Okay, this is the high here. Where are the potential support levels? In terms of price action, probably this level here. If I were to look across this level here, where the 38.2% is, this does look like a pretty significant level, right? We can see price running into resistance here in mid-October, and then once again at the end of November, and then when price broke above it, it found support in early December. So this creates a significant overlap level, which is where I've identified the first support. I guess we can argue that this might be an intermediate support. When price fell strongly on this day, yeah, it actually found support and it gapped higher the next day. So this could be an intermediate support at 132.73, and the first major support is this overlap level at 131.45, which is which aligns well with the 38.2% retracement. Second support, I would look at this level here, approximately at this level here, right? Once again, it's another overlap, price running into resistance here, and then finding support on November. And you can see that this level here extends up to here, extends up to 8 November as well, in a sense, right? So I would identify the second support as a zone rather than an absolute level. We'll just keep 38 and 15%. All right, okay. So this is what we have for um, XLV, the healthcare sector. Let's look on the downside. In this case, you can see that I'm not using absolute levels, right? I'm using relative levels. So in some cases, I saw this, I would set the stochastic at 10. Some may be a bit higher, some may be a bit lower. So do take note, the stochastic levels are not fixed, right? It's not always 80 and 20. It could be 10, it could be 15, it could be 5. It's all relative uh, uh, to that particular stock or to that particular ETF, right? So in this case, you can see whenever it's sort of dipped under 10, it has signal a potential buying opportunity, right? You can see that it has signal potential buying opportunity, but of course, never use any indicator in isolation. Oops. You can see there's false breakouts here as well, a false buying opportunity as well. This year, yes, it did bottom, but it was a very short-term bottom, and price continued to trade to fall lower. Right? You can have false signals, so do take note of that. Not every time, not every opportunity here signals major short-term bottom for that share price. All right, so this is what we have for XLV. All right, okay. What about metals? Okay, hi Rajesh. Sorry, this is uh, this webinar was targeted at stocks and ETFs. So I'm sorry I won't be able to go through metal, and also we are running out of time as well. All right, I do have um time for just one more analysis. If you would like me to see any particular stock or ETF, please let me know now. I'll be more than happy to run through one more analysis with you before we round off today's session. All right. If not, let me just launch a poll as well. I appreciate if you guys can give your feedback with regards to this webinar. And then once this poll is done, I'll be more than happy to run through one more analysis should there be any requests. All right, I think pretty much everyone has responded. Okay, no, it's still collecting responses. Hang on. I'll just wait about 30 more seconds, get everyone an opportunity to respond. XME might be metals. All right, okay, fair. Okay, I can do XME. Let me just check it out. All right, great. Okay, I'll just close the poll now. All right, thank you everyone for the feedback. All right, let's just do one last one. XME, let's just check it out. Is it indeed a metals ETF? Oh yeah, okay, it's a metals and mining ETF. Fair enough. Let's just round out the session with this. Okay, there's a question by Pius as well. How can one spot a top performer in the new year? Uh, well, see, you have to look at, because ETFs, stocks, you'll have to look at the fundamentals as well, right? You have to look at the fundamentals of that particular company, look at the past earnings results, look at what they are projecting for the upcoming quarter, right? In terms of forward guidance or outlook. You also have to look at the macro environment that we're currently in. If the Fed continues to remain dovish, right, this supports a very this creates a very supportive environment for equity markets as well, and you have to pay a bit more attention to that particular sector that you're trading in as well. So for stocks as well, it is a combination of using technical analysis as well as doing some fundamentals as well. If you really want to if you really want to be able to spot a top performer, right? You would need to have the both analysis, fundamental and technical as well to try and identify a top performer for the new year. All right, okay, let's just round up with this. Hang on, sorry. Let me just get to it. All right, okay, let's just do XME. Okay, let's zoom out a little bit. Right, okay, so this is just a recap. It's a metals and mining ETF, so it tracks mining companies as well as I believe should be the futures prices of metals as well. So this could be gold mining companies, copper, and so on and so forth. All right, so we can clearly see the all-time, is this an all-time high? It does seem like it's an all-time high here. That was set in April of 2022. So naturally, that's going to be our second resistance. First resistance is very likely, is this high that was achieved at the end of last year, right? Which is at 6180. Okay, where I would identify a support level, we do see a pretty decent pullback support level here. This was previously a major pullback resistance level, or you can argue it's a swing multi-swing high resistance level. So this is a level where we could potentially find support now. Second support, maybe we can use a Fibonacci retracement to help us identify certain level. And then the next support, okay, we can see that the first support at 58.61 aligns very well with the 23.6%, so that's great. We do see a gap up here, but I don't see any other major support levels. Perhaps this gap up here, this was previously a pullback resistance, price coming off 56.25 back on 1st December, and then after that gapping above it. So potentially this could be the second support, or if not, where I see a bit more of a strength would be here. The second support at $53. You can see price falling, pulling back for a few days, right, for nearly a week, and then finding strong support here before bouncing higher, which is also a level that aligns with the 61.8% Fibonacci retracement. This level here at 56.25 could offer some support as well, but yeah, I don't think this will offer as much significance as it would here. All right, okay, so let's just keep 23, 38, and 61. Okay, so this is what we have for metals and metal and mining companies. So do take note. Similarly, again, whenever stochastic has come about 95, and we do see prices usually run into resistance as well. Right, again, not always, but do take note, it does help to identify potential oversold positions, overbought positions. Similarly to the downside here, whenever price is about dipped below 15, right? You can see stochastic dipping under 15. It has helped to identify potential buying opportunities as well. All right, thank you. So these are the key support and resistance levels for XME based on the daily time frame. All right, thanks everyone for tuning in today. Hope this has been a great session. Do take note, just a quick recap. Yeah, for trading equities and ETFs and individual stocks, yeah, technical analysis can help, but do take note of the macro environment that we're in as well. Typically, a stronger dollar and rising bond yields are unfavorable for equities. And if we see the dollar continue to sell off and we see treasury bond yields continue to fall, as we've seen since December, right? This creates a very supportive environment for equity markets. And then look at the respective earnings for that particular company, right? Look at Q3 earnings report, what have they done in the past, and look out for their outlook and forward guidance for Q4 earnings, which will start in February of this year. All right. All right. Thanks everyone for tuning in to today's webinar, and I wish you all your best in the trading journey and Happy New Year. And I'll just round off with the ending disclaimer. All right, do take note of the risk warning that comes with trading Forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. All right, thanks everyone for tuning in, and have a great trading week. And I'll catch you guys at the next webinar.